Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. Well, we made it to the end of the year. Today's the last trading day of the year. What's going on? The Dow's down about 200. NASDAQ's down about 100. So we're going to close the year out on a down note. Now, the new year will be starting next week. We'll have the first trading day on Tuesday. Markets will be closed Monday. Now, how do I think that's going to play out? Well, I think that's going to play out with the short squeeze. I think that everybody right now, there's too many people betting that the market is going to go lower. Everybody's got these puts on. Puts are at a record number right now. They're betting for the market to go down. And a lot of times when everybody's on one side of the boat, it just goes the other way. That's just how the market goes. It will hurt the most amount of people possible. So I think the new year, 2023, will start off with the short squeeze. Now, where are we at? On the SPY, we're sitting right at 380. We just moved sideways the last couple of weeks. And I think that this has built up the energy enough for a short squeeze. I think that short squeeze is going to push us up to the 400 level, around that, maybe a little bit lower on the SPY. And once this head fake comes in, everybody's going to go, well, look at the market's going to do great, right? I mean, 2023, it takes off with the short squeeze. People will think the bull market's back. They'll be jumping in, and that's when the market's going to hurt you to the downside. So this short squeeze that's coming, probably next week, we're going to get a move up, and then we're going to move lower. 2023 is not going to be a pretty year for the markets. The stock market, I don't believe, is going to do well in 2023. The housing market is going to do even worse. Let's get over to the housing market now. Right now, the housing market is in the biggest bubble of all time. It's a bigger bubble than it was back in 2008. You can tell by the prices. The prices are higher. The bubble's bigger. They pump more money in. This is a fake market. All it's been is just the pumping in of trillions and trillions of dollars. Now, in 2009, they came out and admitted they're going to print trillions of dollars just to pump up the market, just to get the market to go higher. And it worked. Guess what? For the last 12 years, we've done nothing but go straight up, right? Well, the market's changed now. It changed back in June. The interest rates went from 3% to 7% for a mortgage, and the market has started to come back in. Now, it's only down about 10% from where Billy Bob got out at, but it's going to go down a lot lower. Now, why do I say that? A lot of people say, but Mike, it's not going to crash this time. There's no subprime. These are solid borrowers. They put 10, 20% down. Some did. The most, about 5%. And a lot of that 5% is already wiped out. If you bought in the last year or two, the money's already gone. You're already underwater. And where do the most foreclosures happen? The most foreclosures happen when people are underwater. That gets the spike in foreclosures going. And right now, foreclosures are starting to spike upward. But that's not the real reason that we're going to crash harder than we did in 2008. 2008, we only came down about 34%. This time we're going to come down by about 50%. Now, why do you say that, Mike? Why do you say it? Well, we got to talk about this a little bit. Okay, there's what's known as strong hands, and there's what's known as weak hands. Now, if you're in the Bitcoin market, you know about diamond hands, right? Diamond hands, they just hold on forever. They never sell. They wait for it to go all the way to zero. They're still won't sell. Maybe it goes to 1 million. They won't sell. They have diamond hands. In real estate, we have what's known as weak hands and strong hands. Now, people would say that right now are the strong hands, that the weak hands were in that subprime mess back in 2008, 2009. Those were the weak hands. I would beg to differ on that. Those people were not weak hands. They were owner-occupied people. When you're owner-occupied, you're living in your house. You don't want to give up your house. You want to hold on to it with the strongest hand you have. But right now we have very weak hands in the marketplace. 30 million homes right now are not owner occupied, meaning they're owned by investors, or they're second homes, or they're just sitting vacant homes. They're non-owner occupied homes. That means the owner doesn't live in the house. These are what is known as weak hands. Now there's another reason that they're weak, and that's because they have leverage. Now 1 out of every 4 homes homes out there. 25% of all homes are not owner-occupied right now. We didn't have this problem in 2008. 2008, we had owner-occupied homes. Granted, the owners should not have been owners because they could not afford the cost of home ownership. But right now, we have this 30 million unowner-occupied homes. In some areas, 50%, 1 out of 2 is a non-owner occupied home. These are owned by investors. Now, okay, now how's that working out for the investors? Well, let's think about this. We got companies like Open Door. Do you know Open Door? It's not going to be around much longer. Now, a lot of people think it's still going to be here, but it's trading below $1. If you think it's going to stick around, maybe you buy the stock at $1. But I think it's going to zero. I think Open Door is going to go away. Time to shut the door on Open Door. It's over. The game's over. They lost. They bought houses that were way too high. They can't sell them and they keep falling, so they're going to get out of the business. But you got Blackstone, right? Blackstone now they shut off withdrawals from their funds. Now, not a publicly traded fund, but still it's a privately held fund, and they won't let the people get their money out. Okay, so now they're being investigated because we don't want another FTX on our hands, not without an investigation. I'm not saying Blackstone's do anything wrong. I'm just saying they're being investigated because they won't give the people their money back. They can't give them the money back because they'd have to take these huge losses as prices continue to go down lower. All right, so what else? Okay, so we got these weak hands, and now when the weak hands come into play, look at, they got leverage on this. Okay, so here's how it works. Blackstone borrows money. Granted, they borrow money at a very cheap rate from the Federal Reserve. They borrow that money and they buy these houses. Now the cost of money, those going up, right? And they're getting these rents, and now rents, they've been going down. 2 months in a row, rents have gone down. 2 months in a row, it's starting to trend. The trend is lower. As rents continue to go lower, your return on your investment goes lower now, but also the return on investment's lower because the interest rates that they're paying for that debt is going up. So they want to get out of the market because, look, they could take their money right now and put it in a treasury bond, and they could get like 4% on their money. This is about the same return they're getting in the housing market, but yet they have the headaches of managing all of these homes, managing all the tenants, and they have to do the repairs. They have to fix things. And it's getting harder to collect the rent from the tenants. Number one, the tenants don't have rent. And number two, sometimes the government comes in and says it because the tenant doesn't have any money, he doesn't have to pay, and you can't kick him out. Look at the rental game is changing. It's getting very difficult, but rents are coming down. Costs are going up. It's getting to be unprofitable for a landlord. A landlord can get, just 4% on his money, just put it into government bonds, sit back on his couch and collect the money, and he doesn't have to get that call from the tenant, hey, the toilet's broken. He doesn't have to take those calls. Look, there's repairs. There's active management in the real estate game. People think that it's easy money. The landlord just sits back, collects the checks. Believe me, I've been a landlord many times, and it's not a hands-off game, and that's where a lot of people make the mistake. You got to be hands-on. You got to watch your properties. You got to go in and inspect them. You got to I'd have inspectors come in and inspect them. Make sure you don't have termites holding hands underneath the foundation so the whole house comes in. There's repairs out there. The houses decay and they need to be repaired. So it's not as easy of a game as people make it sound. So right now you could get 4% on your money in a T-bill, or you could manage properties and get about the same return. So these big companies like Blackstone, the institutional investors, they want out. Now what's going to happen when they start dumping all these houses onto the market all at once? Like I say, in some areas, 50% of the homes are owned by investors. If 50% of the homes went up for sale in your neighborhood, yes, in your area, I know you don't have renters in your area. Everybody's an owner occupied in your area. But let's say 50% of the homes went up for sale on your street. Do you think prices are going to go up, or do you think prices are going to go down? Well, a seventh grader would tell you they're going to crash. They're going to crash and burn. That's just the way it's going to play out. So these institutional investors are the ones that are going to crash the market because they don't care. They're going to want to get out at any cost as they start to see their investment disappear down and down and down. You're going to see Open Door. They got to sell all their properties. They're going away. They got to get their investors back anything they can get, so they'll dump them at any price. It's just how it works. That's just the way the game's played. Now look, in 2023, it's going to be the biggest year for apartment buildings. Isn't that exciting? The most new units ever are coming onto the marketplace. New units are being built at a record pace. And these are coming onto the marketplace in 2023. So what does that mean? Well, it means rents are going to start to come down. Look at housing as a financial asset where speculators come in and try to get rich. Those days are going to be gone. It's going to become just a place to live. People are not going to want to own. People are going to be actually happy paying rent because rent's going to be coming down also on apartments. A lot of people are going to get these brand new apartments at a very good price, maybe even half off. And they're going to stay a renter then because it's not going to make sense to buy. And if you have no one buying because all these people are going to stay a renter, where do the new buyers come from? Well, they're not going to show up and prices will continue to drop until it's not this sexy investment that just makes you money. You buy it this year, sell it for 20% more next year, collect a couple $100,000. No, that game's over. We played that game out the last 10 or 12 years. Actually, we've been playing that game about 30 or 40 years. We've had this bull run in the housing market for the last 30 or 40 years. And right now we're going to have year over year declines, and it's going to change the game. It's not going to be the popular thing to be a homeowner. You're going to be actually pretty happy just being a renter with all these new apartments coming on. There's going to be so many to choose. A lot of people aren't going to opt for home ownership. Now down the road when prices come down, then that's the time to start looking at the properties. But right now it's a scary game out there for real estate. Now I know this is just my opinion, and in your area the market could never come down. I get that. That's perfectly fine. Your area there are no apartments. Your area there are only owner occupied people. There are no renters on your street. Everybody owns their property. Well, we'll see how it all plays out for you in your area. This is just my take on the market. It's the last trading day of the new year. I want you all to get out there. Have a very, very happy new year. Give me the thumbs up. Hit the subscribe button because I want to talk to you next year. Me and you, we can go over this stuff. We love this stuff. It's what we live for. Give me the thumbs up. Bye-bye now. Happy New Year, everybody.